Let's move on to Kenya's market, and we continue to see weakness on that end, down by 1/3%, second day of a row this week that we're seeing the market selling off 4,824 points, and certainly off from the year's highs. On the currency front, checking in on the currency versus the dollar, 83.6 is what we're looking at. You're looking at a slight rebound in the shilling this hour. Let's delve into all of this. We're crossing over to Nairobi. As always, Steve Biko, director at the Hidalgo Group, is our market watcher for the day. So Steve, are traders blaming the market falls on the apprehension around cabinet appointments, or is it more to do with high valuations right now?
The market has actually had an interesting outlook this week, given the fact that we've had an interesting bullish the last couple of weeks, only for it to actually starting having a bearish attitude. And this is actually one because many Kenyans actually, and all of us are waiting for the cabinet announcement, because at the end of the day, a lot of things are pending. A lot of, in terms of business transactions and the way forward, policy implementation have all been pending, because now, with the new government in place, new people and new principal officers to actually be able to actualize this. So we're seeing that the market actually reacting to this, but also there's been a lot of market price correction on key stocks, which have been instrumental in the 20 share index going up. So we've seen price correction as investors taking their profit from what they'd done initially in terms of investments in January and between January and February. So this will continue until the cabinet is announced, until the price correction is done towards the end of this month.
Let's talk about the media company, the Standard Group. And of course, we know it publishes the Standard. It's the second largest daily in Kenya, amongst other media. It's 14% rise there in full year pre-tax profit, but not declaring a dividend, looking to reinvest funds. What are your thoughts on the company right now? And of course, that no dividend policy right now.
Basically, the reason why they're not paying the dividends for 2011 is because they want to continue funding the investment plans. We've seen the companies actually taking a turnaround strategy. They've done a lot of investments, and investments have actually not been, the returns on investment have not been as they'd projected. So the company has been doing a turnaround strategy in terms of being able to cut on production costs and be able to maximize on what they already have to actually be able to actualize in terms of the investments. But also, the 14% increase is, given how the other players are doing in the industry, it's a dismal performance, because we're looking at the company has done a lot of investment in the digital aspect, and we're waiting to see the actual numbers of how much of this is actually as a result of the digital investment, because at the end of the day, many of us are expecting at least not less than 21% in terms of pre-tax profit. But given the fact that we've actually gone into a new dispensation in terms of new counties and our products for the counties. So we're looking forward to seeing how it's actually going to be able to turn around its strategy this quarter.
Yeah. Let's just look at individual stocks right now then that you're bullish on, because, just looking on the day, Standard Group leading the losers board, disappointing numbers coming through there. And as you say, we have seen some profit taking on certain counters. So where are you seeing market momentum behind certain stocks?
The interesting thing is stocks like Mumias are stocks which has actually been, many analysts have not really paid keen attention to it. It has been one of the key movers today. We're looking at Safaricom, we're looking at the finance sector actually being a key mover for the stock market. We're looking at KCB and Barclays Bank. But interesting thing is stocks in the energy sector, Kenyan Oil and Total, actually been on a losing streak, and this is because given the fact that they've released poor performance. I mean, the results were dismal, and key investors have actually been relooking at their positions in this. But we've also seen key strategic announcements by Kenyan, so which is actually affecting the energy segment. But going forward, stocks like KCB, Safaricom, Mumias, and Sun Group will actually be key stocks to watch, especially with the key investors actually taking more positions, given the fact that we have a bearish attitude towards the market. So this is the best time for most of them to actually get in and take positions.
Let's just talk about Kenya Airways, because we've just had their fourth quarter operating performance figures coming through, and I'll just read through some of the numbers. Market capacity 3,143 meters seat kilometers, and that's 4.5% below last year's level. You've got Middle East and Far East regions capacity growth there of 18.9%. Europe capacity shrinking by 30.4%. We know, of course, rationalization taking place on those routes. But certainly what is interesting, West African region declining 6.5% as a result of pulling back on flights to that end. And then you've got local capacity, which declined 2.3%, even though they increased their routes in Kenya. So, Steve, a lot of numbers to look at right now, and I suppose we'll have to delve into what they mean going forward. But what is your view on Kenya Airways right now, in light of the fact that there's, of course, a lot of cost pressures for the company, and certainly these numbers indicate that capacity has shrunken over the previous quarter?
It's interesting to see the turnaround in terms of our KQ strategy, because this is a stock that's actually for the last few quarters it's been on a bearish trend. But it's interesting, given the numbers, given the fact that the management has actually turned around. They've taken in some harsh decisions that have not really gone well with the key stakeholders in the industry. But looking at going forward, given the fact that they've gotten new planes, we're looking at new routes, especially in Asian markets, African markets. I believe, despite the challenges that the industry is actually facing, this coming quarter should actually be positive for it, because of the decisions the management has actually been able to take, and also the fact that they've also looked at bringing in more personnel, more foreign personnel, to be able to bolster its foreign routes, especially to Europe and China. And also, I think what I know is one of the key issues is that it's banking on a renewed foreign policy with the new government and other governments to be able to bring in new business for it, because at the end of the day, the Kenyan government is a key stakeholder in the industry. So despite the interesting numbers coming out, the one key thing the management is looking at is actually being able to show our profits and be able to calm jittery investors who've been keen on how it's going to handle its labor issues.
Yeah.